What's up, tech enthusiasts, and welcome back to ChatGPT Insights. The pace of innovation is absolutely relentless, and the AI landscape is shifting faster than ever. We've got some massive updates that you absolutely cannot afford to miss. Get ready, because we're diving deep into the future right now. First up, a stern warning from OpenAI's own Sam Altman about a global tech superpower. Then, we'll break down why the US might be seriously underestimating its AI rival. After that, we'll explore if even the architect of the AI revolution believes we're in a bubble. And finally, we'll unpack the latest analysis that AI stocks might be heading for a dot-com-style crash. Stick around, you won't want to miss a second of this. Hit that subscribe button and ring the notification bell so you never miss an update. China's AI supremacy. Altman sounds the alarm. In a stark warning that has sent ripples through the global tech community, OpenAI CEO Sam Altman has voiced significant concerns about the United States' preparedness in the escalating artificial intelligence race, particularly with a focus on China. Altman, a pivotal figure in the AI revolution, believes the U.S. is potentially underestimating the depth and breadth of China's advancements in AI, suggesting that current strategies, including export controls on advanced semiconductors, may not be sufficient to maintain a competitive edge. His candid remarks, delivered during a rare on-the-record briefing, highlight a complex geopolitical and technological struggle that extends far beyond a simple measure of which nation is currently ahead. Altman elaborated on the multifaceted nature of this competition, stating, "There's inference capacity, where China probably can build faster. There's research, there's product, a lot of layers to the whole thing." He expressed skepticism about the efficacy of solely relying on export controls, noting, "My instinct is that doesn't work." He elaborated on the potential for workarounds, such as the development of domestic semiconductor fabrication facilities, or fabs, which are crucial for producing the advanced chips that power AI systems. You can export control one thing, but maybe not the right thing. Maybe people build fabs or find other workarounds, he cautioned, emphasizing the difficulty in finding simple solutions to this complex challenge. These statements come at a time when the U.S. government is actively adjusting its policies to curb China's AI ambitions. While the Biden administration initially tightened export controls on critical technologies, former President Donald Trump further escalated these measures by halting the supply of advanced chips. More recently, a notable exception was made for certain China-safe chips, allowing sales to resume under a controversial agreement requiring companies like NVIDIA and AMD to share a percentage of their China-based chip revenue with the U.S. government. This creates a complex and potentially difficult-to-enforce regulatory environment. Meanwhile, Chinese companies, such as Huawei, are reportedly pushing forward with their own domestic chip alternatives, raising questions about the long-term impact of U.S. restrictions. Altman also revealed that China's AI progress has influenced OpenAI's own strategic decisions regarding the release of its models. The company's recent decision to release open-weight models, a significant departure from its previous closed-door approach, was partly motivated by the desire to counter the growing influence of Chinese open-source AI systems like DeepSeek. "It was clear that if we didn't do it, the world was gonna head to be mostly built on Chinese open-source models," Altman admitted. "That was a factor in our decision, for sure. Wasn't the only one, but that loomed large." This strategic shift saw OpenAI release two new text-only models, GPT-OS 120B and GPT-OS 20B, designed for local execution and customization by developers and researchers. While OpenAI is not making its training data or full source code public, releasing the model parameters as open-weight allows for greater transparency and control compared to proprietary models. This move positions OpenAI as a counterpoint to Meta's Llama models, which had previously championed openness but may be reconsidering that strategy. OpenAI's gamble is that by fostering broader accessibility, it can cultivate a stronger developer ecosystem and better compete against its international rivals. However, the reception to these open-weight models has been mixed. Some developers have expressed disappointment, noting that certain capabilities present in OpenAI's commercial offerings have been omitted. Altman acknowledged this, explaining that the models were optimized for a specific use case, locally run coding agents, with the potential to adapt if global demand shifts. But what if the very engine driving this AI race is overheating? Stay tuned as we explore the growing concerns about an AI investment bubble and whether it's poised for a spectacular burst. U.S. underestimating China's AI might, warns OpenAI's Altman. In a candid assessment that challenges prevailing U.S. strategies, OpenAI CEO Sam Altman has issued a potent warning. The United States may be significantly underestimating the scale and sophistication of China's advancements in artificial intelligence. Altman, a leading figure in the AI domain, expressed his apprehension during a recent discussion with reporters, emphasizing that the AI competition between the U.S. and China is a far more intricate and consequential affair than a simple race for supremacy. He articulated concerns that the U.S. reliance on export controls for advanced semiconductors might not be a foolproof strategy to maintain its technological lead. Altman highlighted the multifaceted nature of the AI race, pointing out that China possesses considerable strengths in areas such as inference capacity, where it might be able to develop and deploy AI systems more rapidly. There's inference capacity, where China probably can build faster. There's research, there's product, a lot of layers to the whole thing, he explained. His skepticism towards the effectiveness of export controls was clear. My instinct is that doesn't work. He elaborated on the potential for circumvention, suggesting that restricting one component might lead to the development of alternatives or workarounds, such as the establishment of domestic semiconductor fabrication facilities. You can export control one thing, but maybe not the right thing. Maybe people build fabs or find other workarounds, Altman stated, underscoring the difficulty in imposing a complete technological blockade. These remarks coincide with evolving U.S. policies aimed at curbing China's AI capabilities. The Biden administration's initial export controls were later expanded by former President Trump, who sought to halt the supply of advanced chips. However, a recent policy adjustment carved out an exception for certain China-safe chips, permitting renewed sales under a controversial agreement that mandates companies like NVIDIA and AMD to allocate 15% of their China-related chip revenue to the U.S. government. This intricate regulatory framework presents challenges in both navigation and enforcement. Simultaneously, Chinese tech giants, including Huawei, are reportedly accelerating the development of their own indigenous chip solutions, casting doubt on the ultimate success of U.S. supply chain restrictions. Altman also shed light on how China's AI progress has influenced OpenAI's strategic decisions, particularly concerning the release of its own AI models. He revealed that the competitive pressure from Chinese open-source AI systems, such as DeepSeek, was a significant factor in OpenAI's recent decision to release open-weight models. It was clear that if we didn't do it, the world was gonna head to be mostly built on Chinese open-source models, Altman confessed. That was a factor in our decision, for sure. Wasn't the only one, but that loomed large. This strategic pivot led to the release of OpenAI's first open-weight models since GPT-2, GPT-OS 120B and GPT-OS 20B. These models are designed to be more accessible, allowing developers and researchers to download, run locally, and customize them, offering a lower-cost alternative. Making the model parameters public, while not the same as full open-source release, training data and code remain proprietary, provides greater transparency and control. This move positions OpenAI as a key player in the open-weight movement, contrasting with Meta's potential shift away from its open-source strategy with Llama. OpenAI appears to be betting that this increased accessibility will foster a wider developer ecosystem and solidify its competitive standing against global rivals. Despite the strategic rationale, the initial reception to OpenAI's open-weight models has been mixed. Some in the developer community have found them less capable than OpenAI's commercial offerings, noting that certain powerful features were intentionally omitted. Altman acknowledged this, clarifying that the models were optimized for specific use cases, primarily for locally run coding agents, with the flexibility to adapt to evolving demands. While the AI race heats up, a different kind of storm might be brewing in the investment world. Prepare yourself as we delve into the possibility that even the visionary behind OpenAI sees the AI market teetering on the edge of a bubble. AI bubble fears, even Sam Altman sounds the alarm. Sam Altman, the CEO of OpenAI and a central figure in the current artificial intelligence boom, has expressed significant concerns about the industry's trajectory, suggesting that the market may indeed be caught in an AI bubble. Despite his unwavering belief in the transformative power of AI, Altman candidly admitted in an interview with The Verge that investor enthusiasm might be outpacing the tangible realities of the technology's current deployment and monetization. When bubbles happen, smart people get overexcited about a kernel of truth, Altman observed, drawing a parallel between the current AI fervor and historical tech booms. He elaborated on his perspective. Are we in a phase where investors as a whole are overexcited about AI? My opinion is yes. Is AI the most important thing to happen in a very long time? My opinion is also yes. This dual perspective acknowledges AI's profound importance, while simultaneously flagging the potential for irrational exuberance among investors. Altman's comments are particularly noteworthy given OpenAI's own prominent role and success within the AI landscape. Companies like NVIDIA, whose GPUs are fundamental to training and running large-scale AI models, have experienced unprecedented stock growth. This symbiotic relationship underscores the intense investor interest and capital flowing into the AI sector. Altman clarified that his concern is not necessarily with the broader investment in AI and semiconductors themselves, but rather with the speculative nature of investments being made by those pouring vast sums of money into the technology without sufficient grounding in fundamentals or sustainable business models. His remarks resonate with a growing chorus of analysts and industry leaders who are beginning to question the sky-high valuations of many AI-focused companies. The narrative suggests that while AI is undeniably a foundational technology for the future, the current market environment might be amplifying expectations to unsustainable levels. This sentiment is echoed by various financial experts who have voiced similar concerns about potential market overheating, comparing the current situation to the dot-com bubble of the late 1990s, where speculative investment led to a dramatic market correction. The implications of an AI bubble bursting could be significant, potentially leading to a shakeout where companies with weaker fundamentals struggle to survive. However, as Altman himself noted, even during the dot-com crash, groundbreaking companies eventually emerged and thrived. The key, he implies, is to differentiate between genuine technological progress and speculative hype. Investors and companies alike are being urged to focus on building robust business models and achieving sustainable growth, rather than simply riding the wave of market momentum. This cautious optimism suggests that while the path forward may be turbulent, the long-term potential of AI remains immense. As the excitement around AI's potential continues to soar, some analysts are comparing the current market frenzy to a past era of tech speculation that ended in a spectacular crash. Get ready to find out if AI stocks are truly headed for a dot-com style bubble. AI stocks in a dot-com bubble, Altman issues stark warning. OpenAI CEO Sam Altman has voiced significant concerns that the artificial intelligence market may be experiencing a bubble, drawing parallels to the dot-com boom of the late 1990s. In a recent discussion reported by The Verge, Altman indicated that investor excitement surrounding AI might be exceeding the technology's current fundamental value, despite acknowledging AI as one of the most crucial technological advancements in decades. Altman's assessment suggests a market environment where valuations are escalating rapidly, potentially outpacing the development of sustainable business models and predictable revenue streams. He drew a direct comparison to the dot-com era, a period characterized by inflated stock prices for internet companies, many of which lacked clear paths to profitability. That era culminated in a significant market correction, with the Nasdaq index experiencing a nearly 80% decline between March 2000 and October 2002. Altman perceives similar patterns in the current AI market, noting that the intense hype surrounding artificial intelligence bears a resemblance to the speculative fervor of the internet age. His remarks align with warnings from other prominent financial experts and industry leaders who have expressed apprehension about the current market valuations. Figures such as Joe Tsai, co-founder of Alibaba, Ray Dalio, founder of Bridgewater Associates, and Torsten Slok, chief economist at Apollo Global Management, have all voiced similar concerns. Slok, in particular, has suggested that the current AI market bubble might even surpass the scale of the internet bubble, citing the elevated valuations of major companies within the S&P 500. Altman identified a key risk: an influx of capital into companies with minimal substance. He highlighted the phenomenon of startups securing substantial funding and high valuations based on little more than 3 people and an idea. He cautioned that investors are likely to face losses when the market inevitably corrects, and the focus shifts from speculative momentum to profitability and sustainable growth. In his view, the current enthusiasm for AI is outpacing the establishment of sound business models and realistic valuations, mirroring the dynamics of the 1990s internet cycle. Despite these concerns, Altman anticipates a mixed outcome from this period of intense investment. He believes that while some investors will incur substantial losses, others will achieve significant gains, ultimately resulting in a huge net win for the economy, albeit through an uneven path. His core advice to both startups and investors is to prioritize fundamental value and sustainable growth over market momentum. This principle, he emphasized, remains as critical today as it was in the aftermath of the dot-com crash. We've heard the warnings about AI's potential bubble, but what about the groundbreaking advancements that are shaping our future? Get ready for a rapid-fire recap of all the top stories, and make sure you're subscribed for more insights. And that's a wrap on today's essential AI updates. We heard OpenAI's Sam Altman warn about China's AI progress, discussed the potential for a U.S. underestimation of its rival, explored Altman's own concerns about an AI investment bubble, and analyzed the possibility of AI stocks mirroring the dot-com crash. Don't miss out on any future developments. Smash that like button, subscribe to ChatGPT Insights for your daily dose of AI news, ring the notification bell so you're always in the loop, and follow us on all our social channels to join the conversation. We'll see you in the next one.